Good morning, good evening, good afternoon, depending on where you are on the planet, and welcome to the Bull versus Bear Trade Day webinar for Thursday the 10th of March. Steve Miley on the call. So welcome everyone. Go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up. Take a look at articles from the major news wires. What are the macroeconomic, geopolitical, economic data events that are impacting markets right here, right now? And then we'll take a look at some charts, see what's happening, and where we can hopefully profit from the various movements we're getting. So let's take a look first of all at data. Big day today. ECB, European Central Bank. Remember, back in early February, pivoted to a slightly more hawkish tone. Since then, a lot of the tone from the ECB has been far more dovish again. Expecting that to be confirmed today with a pivot back towards more dovish, but keeping options open. Obviously, inflation is, with themes we've been covering again and again on the webinars. Inflation is a real issue in here. It was already a real issue back in January, February, and becoming more of an issue. And now with the commodity price spikes that we're seeing to the upside, given the conflict in Ukraine, we're seeing potentially or almost certainly higher inflationary pressures coming down the pipeline, and hence it's a real issue for central banks, and a lot of talk now. Seeing lots of articles in here, and people talking about stagflation and another stagflation risk, soaring energy prices, ECB decision today. So ECB today, that's in about 12 minutes. It'll be while we're on the call. The actual the policy statement might give us something, but the actual rate decision, we're not expecting any changes. So no changes are anticipated. But the policy statement might give us some clues. More likely to get from the press conference, which is about an hour's time in here. Waiting for that to get some more clues. I know we're trading mostly. You guys are trading mostly U.S. markets or commodities, but that can have an impact in here on markets if the ECB step towards more dovish. That would probably be taken as a positive by European stock indices, should help them maybe higher, and then also help potentially US stock indices higher as well. So we're certainly watching out for that. But there is an expectation of a pivot towards more dovish. Also, the EU previously mentioned potentially issuing bonds, and that's been put forward of late, issuing bonds to finance defense spending and also humanitarian efforts, etc. So and also to deal with the energy crisis. So it will be interesting to see what happens with that as well. If we get anything, we might not get anything. No, it's not necessarily within the ECB's direct remit. We might get some comments on that. We may not get some comments on that. We might get some, So the press conference is going to be where it's at. That's in 55 minutes in here. So certainly keeping more an eye on that. But in 10 minutes' time, we do get the monetary policy statement. So we'll take a look at that, see if we get anything from that as well, if we get time on the call. So that's the initial focus. Really, the big focus at the same time as we get the press conference, we get the release of the US CPI data. Obviously, geopolitical events, the conflict in Ukraine has overshadowed economic data, but this is probably the most important piece of data. This, alongside the US employment report, but that's kind of been a bit sidelined. We know we've got strong employment, right? Inflation, it's all about inflation at the moment. The inflation data are important. PCE data is important as well, personal consumption expenditure data. That's the data the Fed tell us that they keep more of an eye on. But nevertheless, the CPI is more of the headline data, and obviously the Fed do watch that as well. So that is going to be quite a biggie. That could impact markets in here certainly today. Given that we've got kind of no new news, and yesterday no new news out of Ukraine was seen as a positive. Things weren't getting any worse, so we saw a really strong move. And no kind of real rhyme or reason to the really strong up move that we saw through the session. It was already, when we were on the webinar, we were already significantly higher, went even higher still, and closed out very strong. We did get overnight as well, which I actually haven't got any. Let me just quickly go into one of the Bloomberg pages here and just type in and do a search for Amazon, but just to pull the article up. But we did get last night after the bell in here, we got announcement from Amazon saying that they okay, here we go. So here we have last night Amazon announced a 20-for-1 stock split. That's the first time they've done that for many years, I think 2 decades. Yeah, 2 decades in here. And also a $10 billion share buyback proposal. So both of those are positive. Stocks in after hours last night rallied as much as 10%. I think, it's saying here, 6.7% in pre-market this morning. So they did give back, spiked up to 10% higher last night. On that news, pulled back to about 5 to 6 to 7% up overnight. Pre-market is saying here, I don't know if they're still sitting there because the broader market has dipped back lower in here. The tech's lower. We'll talk about that shortly. But so this was an extra boost as well for tech sector, for broader stocks in here. With Amazon surging up to 10% and currently around 5, 6, 7% higher. Expected to open 5, 6, 7% higher once trading opens on Thursday. So that's obviously all been bullish. And again, yesterday I did say, sometimes there's not an actual real development that drove stocks high. That the always in here you'll see journalists trying to fit a story. So yesterday it was like, value buying, buy the dip comes in, and maybe that was going on. It was a bit of like no news was good news. We had no real negative developments through the first part of the week, Tuesday through Wednesday. The market had sold off, become oversold. Maybe there is some value in there. And then markets decided, you got to start a bit of a squeeze going. And then some of the weaker shorts get squeezed out. Some of the shorts start to take profits. And I read last night, I don't think it's on any of the articles I've got here, but the S&P 500 has its best update since June 20. Remember, June 20 was when we had with the recovery, the initial post-pandemic sell-off. So the big sell-off was March 2020, March through April. It was very toppy, like April through May, and then May through June, July. We saw a really strong recovery in global stock indices. So the best day yesterday since June 2020, since that post-pandemic sell-off recovery. A really strong day yesterday, but not particularly driven by anything. Short covering, maybe some of the fast money hedge funds taking off shorts, maybe some longer-term buyers coming in buying value, some weak shorts getting squeezed out of poor positions, maybe established earlier this week. And then, we've got kind of similarly in here today, we have a little bit of, US futures fall on inflation fears. Well, why were they going up yesterday? The data was, and those inflation fears, they're talking about the CPI data coming up, right? And the fact that, the fact that we've seen commodities spiking high, and obviously commodities pulled back yesterday, allowing stocks to go higher. We've got that inverse relationship at the moment between commodity prices and stock indices. So we've got an inverse relationship. Often those are positively correlated, but because we're in a big inflationary cycle, because I've got the pressure of the conflict, there's an inverse relationship now between commodities. Commodity prices, higher commodity prices being seen as negative for stocks. And so you get a response today, and then we've seen a bit of a rebound or recovered, in here overnight this morning through the Asian European session. And so stocks are back lower in here. But then again, we've got, US futures fall on inflation fears. Well, is it really? It feels to me we've just got flow. Markets are flowing, they're ebbing and flowing. And this wasn't particularly driven. There wasn't an event. It wasn't that started this move. Basically big sell-off. Over the last week or two. Really strong rebound yesterday, giving some of that rebound up. So we're going back to the charts and seeing what we're going to get from the charts as we move forward. So, but we did have that kind of positive piece of news from Amazon. And, the reason the 20-to-1 stock split is positive because it opens up for retail traders, right? When you're trading with a 4-digit price, as Amazon was, then... so small investors are needed up to the $2,500 to own an Amazon share. 20-for-1 stock split brings it down to $139. So it's more affordable basically. So you don't, you're encouraging smaller investors to become involved. So all of this, positive. Let's go through 5 things to start your day in here. The one kind of pseudo negative this morning was we did have talks between the highest level talks we've had. The foreign minister of Russia and the foreign minister of Ukraine met in Turkey. They both came out saying, both held news conferences, both saying, no real progress made. So I kind of guess a bit of a negative from that in here. US House of Representatives approved legislation barring US imports of Russian oil. You could see that as a negative. Rio Tinto joined the list of companies severing ties with Russia. And then inflation. Wild swings in raw material prices make inflation data due in the US today hard to predict. So that is going to be a big piece of data today. So I really think we need to be watching that. In just under an hour's time. European Central Bank as well, obviously all in focus, and probably switching back to more dovish, and we'll get some more news on that, in the next few minutes, the actual decision. But the press conference, so at 7:45 Eastern, is in a couple of minutes' time we have the decision, and then 45 minutes after that, 8:30 Eastern time, 7:30 Central, we get the both the US inflation data and we get the press conference. So you're probably going to learn a lot more from the press conference. So we're going to get them double bubble at the same time, the inflation data from the US and the press conference from the ECB. We've already kind of talked about that. But Amazon there, so stocks fall, inflation fears fitting a story there. Stagflation repeat of 90 series seen by Issing as ECB's biggest risk. So Issing is an ex-Bundesbanker, well-respected Bundesbanker, Ottmar Issing, and former ECB official, German Bundesbank official, and said that stagflation is the real risk. Repeat of the 1970s. Oil price shocks and impacting negatively on growth. And it's something we already know about. And again, look, more stagflation risk, soaring energy prices, ECB decision today. So and Reuters kind of covering similar stuff. Let's just take actually before I'll come back to the actual data where we are, but same kind of thing in here. This one's actually from yesterday. So yesterday, tech and financials led markets back higher as oil went lower. So that's kind of the recap from last night. And then this morning, futures fall and inflation nerves amid Ukraine crisis, right? And then another one from Reuters in here. When it loads, shares wilt. So shares back as the investors see scant hope of Russian-Ukraine talks, and we obviously know now that those talks didn't really go anywhere this morning. So a bit of journalist fit news to the stories rather than the actual a real event triggering any movements. Let's have a look at where we are on the charts, or on the initial where we are today on the indices. So European indices, I had really stellar days yesterday, 3 to 5% up across the board for the major indices. Now we are back down now anywhere between 1% and 3% in here. If you look, most of them are only down like 1.5% to 2%. So not even really in most cases giving back half of yesterday's. So relatively resilient, you'd have to say, but nevertheless certainly giving up gains. European stocks this morning, and similar in here. So if you look at where we closed out yesterday, so up 2% on Dow, up 2.5% on the S&P. NASDAQ was over 3% up on the day yesterday. And then this morning we're down, but look, not only giving back about, half to a third, so, basically at the half. We're under 1% down on the S&P and Dow on the futures, and we're nearly 1.5%, just above 1.5% down, like 1.4% down on the NASDAQ. So we're given back a roughly half, maybe a little less than half in here. And if we go and take a look at, we'll have a look at the charts now. Well, I've got actually one thing on Forex Live, just pointing to the same thing. So this is... the talks foul in here, so nothing really from there. And then going back to our monitoring this each time in here, we've got now basically a little shift. You remember over here we had a chance of no move. Now we've got a slight priced in of a 50 basis point, a 0.5% hike. But I mean, pretty much nailed on that next week's 16th of March meeting of the Fed, we're going to get a 25 basis point hike. Let's take a look at the chart. So I think what's going to be interesting here, really, we'll start off with the S&P, go through NASDAQ, and then look at the commodities. But if we go to the S&P, what I'm going to look at here is, this is what we call a Marubozu candlestick. Marubozu candlestick basically kind of opens on the low, and on a bullish Marubozu, opens on the low. The candlestick is all body. There's hardly any tails, or any wicks in here at all. Any shadows, as we call them, so no wick or no tail at the top or bottom. and closes, near the high on a bullish one. So then 2 days ago, if you look in here, or 3 days ago, should I say, back on Monday, we had it was Monday, right? In here. So hold on, Thursday, Wednesday, Tuesday, yeah, Monday. Monday we had a big bearish Marabuzo in here. So there you see, look, pretty much opened on the highs and closes right bang on the lows. And we had the opposite of that, and got back, and it was a very erratic day in between. So sometimes with these erratic days, these can be turning points. It was a very negative close back on Tuesday, and then rejected that negative close and really strong rebound. Now we're back lower than today. Now, just the reason I'm talking about the Marabuzo. It's because often with the Marabuzo candlestick, what we use is the 50% level. So halfway is our is key support. You want to hold half of the gains. So if we go and take a look and just throw on a Fibonacci retracement on here of just yesterday's price action, you'll see the 50% we're holding just above that. The 50% is above the current. We're above the 50%, and today's low, which is at 42.28, we're obviously above today's low in here. Currently trading above today's low, and 42.28 is today's low, and the 50% is around 42.24 kind of area in here. Okay, so that's significant. And if we step in onto like a 1 hour chart, you rather than doing the 50%, what you might of the actual yesterday's move, you might do it right from the bottom, but it's not going to be a lot different in here. So if we go and take a look at actually the whole recovery, from the bottom to top. In here, where are we? Well, we're down through the 38.2. Well, we're comfortably above the 50%, and so that's it. That's coming from the very low. Remember, on the daily chart, I drew it off of this low, so there's not going to be a lot of difference between those. But whichever one you draw it off of, we're holding above the 50%, and that's important. So we have had this slide lower, but as you can see now, this is a 1 hour chart. The market we've got a green candlestick trying to go in, and if I zoom in a little bit more on here and step into like a 15-minute. You can see the market trying to turn, trying to base. Now on the 15-minute, look at that candlestick there. That's what we call a hammer. So a hammer at the bottom there is a turning point, signaling back higher. We had then had a positive candlestick, and now the current bar is lower on the 15-minute chart. Let's take a look at the 30, see what that looks like as well. So again, look, a really positive candlestick, kind of like a hammer, not a great perfect hammer, but nevertheless a downside rejection on the last 30-minute bar. Yes, we've dipped back lower. There's still another 11 minutes to close this bar, but looking like it's trying to turn. And remember, here's a 50% retracement turning above the 50% retracement. And also interestingly, look, you see from yesterday's price action, this whole recovery. So this was through the European session in here. Here's through the European session, and then in here, and then this is where we get the US session opening up this last part here. Okay, so around here, this is when the cash market opens here, and then we get the push up higher into the close in here. So this was through the European and Asian and European session, and you can see here's the swing just before the US open. We get this swing, and that swing there was 42.26 and a quarter, so just pre-US open. The market holds there, and then you can see that bar there is actually bang on the US Open. That's the in my time, that's the 2:30 bar, so that's the 9:30 bar Eastern time. That's when the cash market opens, and you can see the low on that cash market open bar is 42.30.75, and we've held here 42.28. So we just pipped below that low, but we held above this low in here that came just before. So this is as US is basically waking up, right? So this is the early hours of the US day. It's the 11:30 midtime, so that's minus. So that's 7:30. No. 6:30 a.m. Eastern. Okay, so the market holding there. So the early part of the US day in here, between the early part of the day pre-open and then the cash market open in here, the market kind of currently holding in that area. So I think this is looking okay, but if we start to break below the current low, if we start to break below the 50%, this turns bearish again. So the market for me in here, this was a really positive recovery. Again, if I'm going to step out now, remember we looked at the downtrend lines and those downtrend lines, and now we're categorically through there. We completed the double, well, actually it was a triple bottom, 1, 2, 3. Triple bottom down here, completed through the spike high that was from Tuesday. And then in here, the market then having completed that, then has faded back lower, but holding on to the 50. So whilst above the 50, I'm kind of bullish in here. What I think we need to do now is, before you actually maybe enter the long in here, where you're going to buy. For me, it's a matter of then, you got this kind of counter trend line off the top. in here, maybe back above this counter trend line in here, which is some ways up. You're talking 42.64, so maybe having a bit of patience. We could be up here by the US equity market open, and I think really what we want to do is wait to see that data, right? So we're countdown now, sub 40 minutes to the US CPI data, plus we have the ECB. At the same time, the press conference, dovish tone from the ECB and not a strong data. If we have, what you really don't want to see is a big print on CPI. But if CPI, just going back to the numbers in here, so if CPI in here, we've got core CPI month on month, we expected at 0.5. If this prints at 0.5, I think the market will sigh a massive sigh of relief. I think in line is okay. If it's less than 0.5, even better, right? If it starts running up at 0.6, 0.7, then we've got to really worry. Similarly, in here, we've got 5.9 on the year on year. I think, you're going to be looking at hopefully, printing at 5.9 or below. If it prints the other way, if we're printing above 6% and above in here on the year on year, then you've got to start to worry that it's going to be negative for equity markets. So, yeah, and I think, either below the current low or below this 50% retracement, which is sitting in of the whole move, it's of the whole move from the low here, it's around 42.18 and a half. On the daily, we put it at 42.24, right? 42. It's around 42.24. So depending where you're drawing that off of. Okay. On the upside, I'm waiting for either a break of this trend. If you want to be more aggressive, you can buy maybe through one of these impulse peaks in here. I'm going to step in now to 15 minute, or even go into a 5 minute in here. You might want to buy, I don't know, above this peak here. These peaks here or these peaks here, looking for the swing back high, looking for a basing pattern form. You could argue in here you got inverse head and shoulders forming on this is now all the way in on a 5 minute chart. So you got shoulder here, head there, is a shoulder building. You draw a neckline across here somewhere, maybe buying the break there. 130 is going to be key though. So sorry, that's 130 my time. Let's just forget 130. Let's just say CPI and the ECB are going to be critical in 35 minutes now, just over 35 minutes now. Let's switch and take a look at NASDAQ. Similar story really. So there's the setback. There's a really strong recovery. If we put it on the just on the Marubozu, the 50% retracement on the Marubozu, top to bottom in here, you can see we're holding above the Marubozu. We've held above the Marubozu. If we go take a look at the 1 hour chart, we completed that triple bottom, 1, 2, 3. We've reversed above all these trend lines, all very positive in here. Here's the market pulling back lower, holding above these similar swing lows in here. These are from the US equity market open and pre-market open, early hours of the US session. So yesterday, so these lows of 13,496, 13,488, 75. So want to hold above those lows. And then if I go then again, the Fibbo, I'm going to take the Fibbo from the whole recovery right away from the bottom this time, not just on yesterday's price action. And then we've got it's a bit lower. It's still in here, the 50% around 13,460. Okay, so through 13,460, I think through these two lows in here, though, if we break below in here, 13,488.75, that'll be a negative in here. So, and again, and we're going to probably know a lot more in about 35 minutes time. Let's step in on the 15-minute chart first of all. You can see the market though trying a turn. You've got a little hammer candlestick, but then not particularly strong candlestick here. And we just finished. Actually, have I gone into it? Yeah, we're just finishing that bar now. But if we zoom in all the way to the 5 minute, yeah, maybe it's above here. Not quite the inverse head and shoulders forming here, but maybe if you want to be aggressive, it's up through here. 13,606 would be, if you're more aggressive, if you're much shorter term trade, if you're in and out through today, maybe up through there is your trigger through the CPI/ECB. Right, let's do our due diligence and look at the commodity markets, and then we'll wrap. Okay, so first of all, let's go for the daily chart. In here, this is gold. Big sell-off yesterday, trying to rebound. If we did the same analysis, you can see we're nowhere near halfway back of yesterday's sell-off. Whether you do it just on the Marubozu, but we've obviously gone lower in here today, or whether you go top to bottom, we're nowhere near. I'll just really quickly put it on, but we're nowhere near halfway back. Okay. There you go. Nowhere near. We're actually just about managing the 38.2% retracement. So nowhere near as positive on gold. However, if we go and take a look here, we do have a 1, 2, 3, 4, 5 point, maybe a 5 point, a 5 point low in here. 1, 2, 3, 4, 5 lows in here, broken above that peak there. So you've got a basing pattern in place. So this actually looks more bullish than equities look bearish to me. Even though we haven't got as much back, we're not anywhere near. So this looks like it could go a little bit back. a little bit higher in here. Let's quick nod to oil. Again, massive sell-off and rebounding here. If we take it from the very high, again, the Fibbo from the very high, you know, we're just about, actually, just do it around the other way. In here from the high. In here, so we're only just got to the 38.2, just had a little play with the 38.2% retracement. That's not particularly well drawn. There you go. Just about prodding at the 38.2% retracement in here, and then if we step in on oil to the 1 hour chart, you know, and show it on here. From the very low to the high, so you can see, look, right, we're just flirting with it and fading. So this looks more negative. So oil looking still more negative. I think this is a rebound recovery. You know, it's not quite at the 38.2. It's fading at the 38.2. I'd look, you know, you've got impulse points here, lows here and here. Look at these two lows here and here. So you've got kind of pivotal area there where the market plunged down through. It's not got back to 38.2, you know, down lower on this current bar. This is a 1 hour bar. Yeah, this looks more vulnerable to me. So oil looking vulnerable. If oil pushes back down into here, back down towards like 109, 108, 107, then I think that will allow the equity markets to push back higher. So keeping an eye, these markets are fairly significantly correlated at the moment. So keeping an eye across asset classes as well, guys, as well as trading whatever market is your market of choice. And remember, volatility is still very, very high. You know, massive up day yesterday on stocks, a massive down day for commodities yesterday. You know, trade those micros. Smaller size, you still got, you know, big movements in here. So trade a much smaller size if you can, guys. All right, I'm going to wrap it there. I'm going to wish you all a great trading day. Stay safe. Take care. I'll be back with you another webinar on Friday, TGI Friday tomorrow. Take care until then. Bye.